It's 10:01. Good morning, everyone. I hope everybody is doing well. I'm going to call the meeting to order. And Shelley, do we have a quorum?
Yes, we do. Would you like to do the roll call?
Could you please?
Jerry Abrahams.
Present.
Heidi DeWinger.
Here.
Kylie Goslin. Tim Hodges.
Here.
Steve Kitowitz.
Here.
Catherine McKinnon.
Here.
Salem Mascara Bruno.
Here.
Franklin Perry.
Here.
Sarah Sanders.
Here.
Lisa Tepper Bates.
Here.
Gwendolyn Thames.
Present.
Greg Ugaldi.
Present.
Cindy Butts and Wendy Clark will not be able to attend.
Thank you, Shelley. So we do have a quorum, right?
Yes.
Public comments. Shelley.
Good morning. If there are any members from the public who wish to provide a comment, please identify yourself before you speak. To ensure that everyone has sufficient time to speak, we're going to limit the comments to 3 minutes. Is there anyone who would like to make a public comment? No comments? I don't hear any comments, so the public comment period has now ended, and I'll turn it back over to you, Commissioner.
Thank you, Shelley. Next on the agenda is the report from the CEO, Nandini.
Yes, good morning, Madam Chair and
Good
members
morning.
of the board. It's been a busy month. It's been a busy quarter. Legislative session is on in full swing in the state. There are a number of housing-related bills that have taken up our time and attention in recent days. We've been having preliminary conversations with NCSHA, which is our state, our national lobbying organization on housing-related issues, on the American Rescue Plan Act, the statutory intent of the law and implications on its implementation for all 50 states. The Housing Assistance Fund, which is the emergency mortgage assistance portion of the law. Although the law itself has passed, it's still early days in terms of Treasury guidance on a number of key provisions of the law. So we continue to be tuned into the guidance that's coming out of the federal government, and how CHFA will be involved is going to be become apparent in the coming days. We recently launched our mobile home refinancing program, which, if you recall, is offering a below market rate for the refinancing of low-income mobile and manufactured homeowner loans with funds from the Federal Home Loan Bank Boston's Helping to House New England grant and funds from our own ITA and Opportunity Fund. The program has been really well received by the Mobile Home Council in the state, and we are currently in the, it's been launched, and we're currently using the council and members of the council to get the word out to qualifying homeowners. QAP work is ongoing. We've been meeting with the task force of the board to consider changes to the 2022 QAP. One recommendation from that process has been to solicit input and feedback from Housing Authority leadership about any impact that it would have on their ability to get their deals done. And so we convened a roundtable of Housing Authority leaders earlier this month. It was a well-attended meeting with 5 or 6 Housing Authority executive directors represented. We generally received positive feedback on the classification changes that are under consideration, and we met with the task force earlier this month to convey this feedback to them. We've also been considering changes to our homeownership programs to stimulate production and make it easier for us to serve our constituents more effectively. The Finance and Audit Committee asked staff to bring forward a discussion on strategies related to home ownership. Hazim will be leading that discussion a bit later on this morning. That's all I have for now. I'm happy to answer any questions.
Nandini, is it our, and I understand that the bill's just been written and Treasury still hasn't completed its work, nor has the counterparts at the state reacted to what the feds are doing. But just in terms of, from your perspective, given how much states are getting under the American Rescue Plan, is it your expectation, knowing that again that the work isn't done, but is your expectation that we will be getting potentially getting substantial resources that we could apply to our mission?
So it is my expectation that Connecticut is going to be receiving a share, a share that's based on a formula that uses delinquency and unemployment data to derive an amount that is approximately, don't hold me to this number, but somewhere around $100 million for emergency mortgage assistance, but it can cover more than mortgage payments. It's expected to be able to cover supportive services and other utility payments, potentially property taxes and things of that nature as well. Does that answer your question?
Yeah, I was hoping that you had. I mean, I figured. I was hoping that you'd have a little, that maybe there was some more insight. But yes, that answers my question. Thank you.
Yeah.
Oh.
There hasn't been any guidance on any of the many components of this bill yet. I think Treasury's busy mailing $1,400 checks.
Okay.
We're happy to share information with the board as we receive it. And like Steve just said, it definitely is evolving and early days. So
Thanks.
I think I'm next as well. So I want to take a few minutes and recognize a distinguished employee here at CHFA, Valencia Taft Jackson, who's retiring after 13 years of service to CHFA. Valencia has been an exemplary leader, mentor, and role model for many employees. She started at CHFA as a manager in the residential lending area and has worked her way up to her current position as Deputy Managing Director. She's a longtime member of CMBA and serves as a member of their board of directors as well, where she is an ambassador for CHFA and the affordable housing industry in general. Valencia's efforts have directly led to many firsts here at CHFA, some of which I'm going to note quickly. She helped establish CHFA University, the well-regarded training program for CHFA approved lenders and their loan officers. It has significantly reduced errors on loans submitted to us for processing and has improved customer service and turnaround times for us as well. She helped develop CALP, the conventional lending program for many borrowers, above 80% AMI. It's a homegrown CHFA program that was developed in response to GSE program changes, removing preferential insurance rates for borrowers above 80. More recently, she helped frame and design the DAP program changes made last fall that reinstated closing cost assistance for affordable home buyers, and of course, the mobile home refinancing program I just referenced. I want to thank Valencia for her tireless efforts on behalf of CHFA, and I'm going to take a couple of minutes to read from a proclamation to her from the governor. You retire after 13 years of dedicated service to the state of Connecticut. Throughout your long tenure, you have earned the respect of your coworkers and mortgage industry colleagues. You have displayed professionalism and outstanding work ethic and a commitment to excellence that are truly appreciated. You've shared your expertise, vision, and compassion for others, not only with your colleagues, but also with the community. Since joining the Connecticut Housing Finance Authority in 2007, You have been instrumental in helping first-time home buyers achieve their American dream. I applaud your lengthy and notable career and wish you the very best for a happy and healthy retirement. Therefore, I, Ned Lamont, Governor of the State of Connecticut, do hereby convey honor and recognition upon Valencia Taft Jackson in the state of Connecticut. Luckily for us, it's not really goodbye. Valencia has graciously agreed to return on a part-time basis under the Retiree Returns to Work program, which we're very grateful for until her replacement comes on board. So with that, I'm going to turn it over to see if Valencia would like to say a few words.
Good morning. Yes, I would just like to thank CHFA for the absolutely wonderful opportunity that they have given me to be able to continue to do work that I've been very passionate about for many, many years, well beyond the 13 that I've been here. It's been a privilege and an honor to work with the teams here at CHFA. All of the accomplishments that I have would never have been done without the camaraderie and the work ethic with everyone else. It's bittersweet to be leaving at a time when I think affordable housing is about to get an influx of funding so that you'll be able to do other wonderful and marvelous things. And I just want you to know that I'll be watching and supporting in ways that I can on the outside. And yes, I will be here to help until a replacement comes. And thank you, thank you, thank you. Bye.
Valencia, on behalf of the board, thank you very much for all your work and dedication. I have seen you through the years, and it has been really a pleasure working with you. I know many board members have known you for over. I want to just open it up for anybody who wants to wish congratulations. As you said, it's not a goodbye. We're going to probably give you a week or two of vacation, and then you come back. Anyone else wants to congratulate Valencia?
Yeah, hi, it's Tim Hodges. I'll just, so I met Valencia back in probably 2003 when I took over the affordable statewide lending for what was then People's Bank, and Valencia and I worked together. I can say that she's always a professional. She was just a wonderful person to work with. You could see her passion when she was teaching the homeownership or first-time homebuyer classes. And I'm incredibly happy for her, and I was thrilled when I came to CHFA and got a chance to see her and the work that she's doing here. So again, Valencia, I want to congratulate you. Thank you for all the work that you've done, and I'm very happy for you.
Thank you.
Anyone else? Well, thank you, Valencia. Thank you. Any questions for Nandini? Thank you, Nandini, for your report. Can everybody put yourself in mute? There is somebody on the phone. Thank you. Next on the agenda is the Finance Audit Committee. Action items. We have two resolutions, and Hazin is going to present them. Hazin?
Good morning. Pardon my appearance. So I had some stuff done earlier in the week, so I'm going to hide behind my name.
Hazin, just say the truth.
Yeah, my wife punched me. How about that? Okay.
Go ahead. Go ahead.
Thank you. Good morning, Madam Chair and members of the board. This morning, I'll be requesting the approval for two resolutions. The first one is regarding authorizing CHFA to issue up to 190 million of the Housing Mortgage Finance Program bonds. The sale will allow CHFA to raise up to 100 million of lending proceeds for first-time homebuyer program and refund about 90 million of outstanding bonds as we continue to take advantage of the current low interest rate environment. This sale, we envision, will be consummated by the middle of May. The resolution was presented to Finance Committee, and the committee asked one question on whether the sale will receive the same type of response compared to the last bond sale. The resolution was approved unanimously by committee, and I'll be happy to answer any questions the board have at this time.
So may I have a motion to approve the resolution?
So moved.
Second.
Any questions or discussion?
Just remind me, what was the rate on the last bond issue, Hazim? Heidi.
The all-in rate at the time was around 1.7. So we have seen an uptick in interest rate. There was a sale yesterday by Ohio, and all-in rate was around 2%.
Yeah, it's amazing how fast it's risen. That's good, thank you.
Any other questions? Shelley, could you do the, could you call the roll?
Yes. Jerry Abrahams,
Aye.
Heidi DeWinger,
Aye.
Kylie Goslin. Aye. Tim Hodges,
Aye.
Steve Kitowitz,
Aye.
Catherine McKinnon,
Aye.
Salem Mascara Bruno,
Yes.
Franklin Perry,
Yes.
Sarah Sanders,
Aye.
Lisa Tepper Bates, Gwendolyn Thames, Glenn Thames,
I'm sorry. I don't know. Something's up with my mic today.
Greg Ugaldi.
Aye.
It's unanimous.
Motion carries. Thank you, Shelley. Hazin, the next resolution?
Thank you. The second resolution is to authorize CHFA to procure a credit facility to help manage its interest expense and preserve volume cap or tax-exempt financing. In an elevated prepayment environment, a credit facility is more efficient and less expensive than issuing bonds. The aggregate amount for the facility shall not exceed 75 million, and the term shall not exceed 3 years. The resolution was presented to Finance Committee, and the committee asked a few questions around the acceleration covenants, number of indications, index being used, and the all-in rate. The resolution was approved unanimously by committee. I'll be happy to answer any question the board may have at this time.
Thank you, Hazin. May I have a motion?
I'll move.
Can I have a second?
Second.
Any questions for Hazin? Shelley, could you call the roll?
Jerry Abrahams,
Aye.
Heidi DeWinger,
Aye.
Kylie Goslin. Aye. Tim Hodges,
Aye.
Steve Kitowitz,
Aye.
Kathy McKinnon,
Aye.
Salem Mascara Bruno,
Yes.
Franklin Perry,
Aye.
Sarah Sanders,
Aye.
Lisa Tepper Bates,
Aye.
Gwendolyn Thames,
Aye.
Greg Ugaldi.
Aye.
Unanimous.
Motion carries. Thank you. Thank you,
you.
Hazin. The Mortgage Committee has 4 action items, and Valencia is going to present the first resolution.
Good morning. You have before you a request to approve a resolution to approve increased allocation of funding of $5 million for the Habitat for Humanity loan purchase program. The Habitat program is a program that we have been participating in over the past 12 years. The way that the program is currently structured, we purchase the loans from Habitat after they provide the first mortgages to the homeowners at a 0% interest rate. We purchase them at a discount of 30% so that we're buying them on par at 70%. The recommendation for the change is to allow CHFA to revise the formula that we use to purchase the loans. Instead of buying them strictly at 70% of value, we're asking to be able to do it based on the current market rate and to receive a yield that is also based on that market rate. We have designed the program so that in doing that, we will never fund habitat at less than 70% of value. One of the benefits of moving to this new structure is that we would be able to increase our funding to Habitat based on the new calculations using the current market rate and the specifics of each individual loan. This was presented to the mortgage committee. They had several questions. One had to do with how many loans had we purchased in the past. I gave an update on that number for 2020 and whether or not the amount we're requesting is sufficient. Based on our past history, it is sufficient. Last year, we bought 9 loans. It cost us about $776,000. So we feel that this amount is sufficient. The mortgage committee approved it, and I will be happy to answer any questions.
You're on mute, Selah.
Doesn't fail. May I have a motion to approve the resolution?
I'll move it. It's Heidi.
Second, Franklin.
Any discussions, any questions for Valencia?
Sorry, Valencia, just the $5 million comes from where, that number?
It'll be coming from the ITA.
No, I know, I understand. I mean, the coming up with the $5 million number, like why is that number? How did you have 5 million? Why isn't that 10 million or 2 million?
Actually, Hazim came up with the number, so maybe he can address that.
Yeah, so the 5 million is based on the program usage. So just like the question that Valencia answered in terms of how much we have done and whether or not the amount for the program is sufficient, since our involvement in the program, we have made just north of 5 million. So this is more just a recapitalization of that same amount. Now, having said that, we also are going to promote the programs, because when we were talking with the local chapters and when some of the local chapters, the people who are now in charge of those chapters were not involved in the original creation of the program. Some of them, they are unfamiliar or not as familiar with the program. So we feel like this is an opportunity for us to, once the program is approved by the board, to go back out and say there's an opportunity here for us to contribute and do more. And if in an event that 5 million is insufficient, we will surely come back to the board and ask for more.
Okay, perfect. Thank you.
Hazim, that was one of the other questions I had. Are we the only ones purchasing Connecticut Habitat loans, or are we competing with someone else, or is it just us?
I would believe that Habitat has other avenues, source of funding, whether through donation, endowment, so on and so forth. But I think this is something that they do pursue in multiple states, and different HFAs offer different type of setup. So in our situation, instead of charging them a rate, we would then buying it at the discount will translate into a yield.
Right.
And under the old program, like Valencia mentioned, we set a cap in a way where we would buy the loan at 70% regardless of the average life. So in this particular model, we feel it would be in favor for the chapters based on the loan delivered, and depending to the average life of the loan or the length of time they would require, there's even an opportunity for them to receive support from us closer to around 90% of
Okay,
value.
right.
Yeah.
Yeah. Okay. Thank you.
Heidi, in addition, it's my understanding that a few habitat organizations have received funds from us through the state tax credit program.
Okay.
So we are providing
We're
funds.
doing it there. Good.
Yeah, in addition to that is the IREPTA. So we also have the IREPTA program. That's the real estate, the interest from the real estate transfer.
Thank you, Hazin. Any other questions? Shelley, could you call the roll, please?
Yes. Jerry Abrahams,
Aye.
Heidi DeWinger,
Aye.
Kylie Goslin,
Aye.
Tim Hodges,
Aye.
Steve Kidowitz,
Aye.
Kathy McKinnon,
Aye.
Salem Mascara Bruno,
Yes.
Franklin Perry,
Aye.
Sarah Sanders,
Aye.
Lisa Tepper Bates,
Yes.
Gwendolyn Thames,
Aye.
Greg Ugaldi.
Aye.
It's unanimous.
Motion carries. Thank you, Shelley. The next three resolutions will be presented by Masuda. Masuda,
Morning, Madam Chair, members of the board. Multifamily has 3 resolutions before you. I would welcome Mortgage Committee to share their comments, and we also have staff available to answer any questions. The first action before you is Hartford Preservation. The board is being asked to approve a construction to permanent first mortgage loan of up to $20.9 million using tax-exempt bond proceeds to Hartford Preservation A LLC. The interest rate during the 24-month construction period will not exceed 4.15%, and then 3.99% during the 40-year permanent mortgage. Secondly, the board is being asked to approve the prepayment for CHFA financing for 3 properties totaling $3.1 million. This transaction represents the preservation of 206 affordable units, serving households earning up to 50 to 60% of AMI in the city of Hartford. 180 of the units will benefit from a 20-year Section 8 HAB contract. The level of improvement for each development will vary from gut rehab to moderate rehab. As you may recall, Barber Gardens was the subject of multiple news stories from a few years ago regarding unsanitary and unsafe living conditions. This particular development will undergo substantial renovation. The proposed redevelopment will preserve the long-term affordability and improve the quality of the residents, as well as ensuring that this asset remains affordable. Mortgage Committee has approved the transaction, and again, we have staff available to answer any questions.
thank you, Masuda. May I have a motion to approve the resolution?
So moved.
Do you have a second?
Second.
Who was that?
Go ahead, Lisa.
Lisa, second. Thank you. Any discussion, questions for Masuda?
So I'll just comment on the Mortgage Committee. The discussions centered around creativity to try to move this project to a more of a mixed income development. But Masuda reminded us that it's this is preservation, and it's a necessary, obviously necessary project. So, you know, we were trying to be looking futuristically if there's something we could do to change the mix, but it's a challenge.
Thank you. Any other comments? Shelley?
Jerry Abrahams,
Aye.
Heidi DeWinger,
Aye.
Kylie Goslin,
Same.
Tim Hodges,
Aye.
Steve Kidowitz, Steve Kidowitz,
Aye.
Kathy McKinnon,
Aye.
Salem Mascara Bruno,
Yes.
Franklin Perry,
Aye.
Sarah Sanders,
Aye.
Lisa Tepper Bates,
Yes.
Gwendolyn Thames,
Aye.
Greg Ugalde.
Aye.
It's unanimous.
Motion carries. Thank you. Masuda, you have the next resolution?
Yes, thank you, Madam Chair. So the next resolution is for Science Park. The board is being asked to consider a one-year moratorium of the mortgage loan to Science Park Development Corporation from April 1st, 2021 until March 1st, 2022. As part of the 12-month extension, the mortgager will be increasing the amount of the monthly principal payment paid to CHFA from $8,375 to $11,775. This extension will allow SPDC to continue to work towards improving their cash flow and gain long-term financial stability with the redevelopment of tracks A and D. The one-year extension allows CHFA to continue to monitor this asset more closely and kind of reassess the situation prior to the expiration of the one-year extension. So with that said, I'm happy to answer any question. Mortgage Committee has approved this transaction.
Thank you, Masuda. Can I have a motion?
So moved.
Second?
Second, Sarah Sanders.
Sarah, thank you, Sarah. Any discussion, questions for Masuda?
This,
Go ahead.
this was a kind of weird one for me. This isn't housing, correct?
That is correct. CHFA's collateral is for a commercial building. That building is being used as a technology incubator. So it's housing companies that are startup as well as emerging companies that are in biotechnology and manufacturing.
Thank you, Masuda. And how many non-housing, and I apologize for not knowing the answer, how many non-housing loans in the multi-family portfolio do we have?
I believe this is the only non-housing loan, but I'm gonna have maybe other staff that's on the phone to confirm.
Hazim, can you confirm if that's the only loan, or Nandini?
I believe so. I mean, if there's any, it's definitely going to be less than 5. But I think that the one that really stands out is this one, Science Park.
And Jerry, just the mortgage committee, we had extensive discussion regarding the difficulties that so many agencies in the state and everybody involved are just really trying to shepherd this unique project through. But we did talk about it for quite a while, and what kinds of safety precautions in a way that we're putting up. And by doing this for a year, it looks like we'll be able to keep adequate tabs on the requirements that they have going forward.
Thank you, Greg. Did you guys in the mortgage committee talk about, potentially selling the loan, or, other, other possible remedies to, just because to some extent it's not, just somewhat ancillary to our primary mission.
Yeah, we did talk about at least setting some goals, but there's so many moving parts to this transaction that it's complicated, and it's in such a state of flux with the environmental issues that I would bet that it's unlikely we could sell this loan at this point in time. Now, once they resolve the brownfield issues, then we have something we can talk about.
Yeah, I would agree with that.
Well, no, they're talking about a brownfield on it.
Who is that? We can't hear you. So Jerry, to your comment, I have been talking to the staff, and I think probably the mortgage committee should have look into a little more details, because this loan does need to be restructured, and whatever restructure it is, they're not making it work for the payments. They're behind on the interest, and it's pretty significant amount of money. So I would encourage maybe the staff is going to be looking at more details, other potential solutions, and then working closely, I think, with the mortgage mortgage committee or anybody else that would like to assist in looking at a structure, in future structure that they can find a way to pay this loan. And it is an acro loan in the portfolio of CHFA.
And my last question, Suda or Greg, is was this unanimous in the mortgage committee, this vote?
The vote was unanimous in mortgage
Yes.
committee.
Yeah.
Okay, thank you.
Yeah, so it basically gives an opportunity to work through a restructure and find other ways to assist the organization, maybe not through CHFA. But we should keep it in the committee's agenda to work through this year that we are going to allow them to have some forbearance.
There probably should be some coordination and maybe a coordinated group effort with CI and the ECD on getting this piece of the pie there straightened out.
Yes, CHFA did reach out to the ECD, and there are, I think, probably Nandini, some meetings set up with the ECD staff.
Yeah, those conversations, like Steve was saying, are happening, and we're going to continue having them to coordinate our response and our approach.
Yeah, we started these conversations a few months back last year, Nandini, and I know, again, we're having those ongoing discussions to really determine what the best path forward and, reduce the risk to the state.
Thank you. Any other questions or comments? Shelley, could you call the roll, please?
Sure. Jerry Abrahams.
Aye.
Heidi DeWinger.
Aye.
Kylie Goslin. Aye. Tim Hodges.
Aye.
Steve Kitowitz.
Aye.
Kathy McKinnon.
Aye.
Taylor Mascara Bruno.
Yes.
Franklin Perry.
Aye.
Sarah Sanders.
Aye.
Lisa Tepper Bates.
Aye.
Gwendolyn Thames.
Aye.
Greg Gugaldi.
Aye.
Unanimous.
Motion carries. Thank you. Masuda, one more.
Yes, one more. So very quickly here, I am here to present the final draft of the preservation policy, which incorporates additional feedback that we received at last month's board meeting. So the action before you is approval of the preservation housing policy. I'm going to just very quickly highlight these additions that are also redlined in the final version of the policy. First being the board asked for a monthly reporting, and so we are going to create a monthly tracking report. So to the extent a prepayment is approved under the delegated approval authority, that information will be reported to the board. And then secondly, there was feedback from the board in terms of how do we create flexibility for households, so if their income is rising, that they're not forced to not accept the raise just so they could keep their housing. And so to the extent possible, that may not always be achievable with some of the federal programs that we work with, but to the extent possible with non-federal or state resources, that's something that we want to look at our guidelines, just particularly as it relates to income certification, so that we can build that flexibility going forward into our processes. The vote in mortgage committee was unanimous. So with that said, we are again asking the board to approve the policy. Following board approval, staff will work on implementation of the new policy as well as related processes. I'm happy to answer any questions.
Thank you, Masuda. May I have a motion to approve the resolution?
So moved, it's Heidi.
Second.
Thank you, Lisa. Any questions or comments? All right, Shelley, could you call the roll, please?
Jerry Abrahams.
Aye.
Heidi DeWinger.
Aye.
Kylie Goslin. Aye. Tim Hodges.
Aye.
Steve Kitowitz.
Aye.
Kathy McKinnon.
Aye.
Salem Mascara Bruno.
Yes.
Franklin Perry.
Aye.
Sarah Sanders.
Aye.
Lisa Tepper Bates.
Aye.
Gwendolyn Thames.
Aye.
Greg Ugalde?
Aye.
It's unanimous.
Motion carries. Thank you, Shelley. Masuda, are you still on for the resolution regarding the reservation of the 9% low-income housing tax credits?
Yes, thank you, Madam Chair. I am pleased to present the recommendations for the 9% tax credit round for your consideration. The board is being asked to approve 10 resolutions to allocate $10,037,361 from the 2021 9% credit ceiling and then forward reserve approximately $4.6 million from the 2022 9% credit ceiling for a total of $14.7 million. These developments will add 692 units, of which 569 will be affordable units. As you refer in your board papers, I'm just going to quickly walk you through the criteria and the methodology for this year's round. By way of summary, CHFA received 15 applications seeking 21.5 million and 9% credits. 4 applications were under the public housing classification and 11 were under the general classification. Similar to prior rounds, we continue to see strong demand for the 9% credit, and we were oversubscribed by a ratio of 2 to 1. Of the 15 applications submitted, 2 were eliminated due to lack of credible financing. As part of our commitment to transparency to the process, we have made some refinements. So this year, CHFA staff and DOH staff were able to meet with those applicants beforehand and provide feedback, as well as helping them understand kind of the process for moving those transactions forward. From there, 13 eligible applicants were scored based on the criteria outlined in the QAP. The average score is 67 points, with the highest application receiving 75 points and the lowest receiving 59 points. One major difference to point out in this year's round is the additional availability of DOH funding for approximately 14 million, which was above the 20 million that was earmarked previously. Given the shortage of affordable housing in the state, CHFA will forward reserve approximately 4.6 million from the 2022 credit ceiling to support these developments. We feel this approach will allow us to maximize the efficiency of federal and state resources and deliver more units at a time of critical need that is further exacerbated by the pandemic. I also wanted to just take a moment to recognize the Department of Housing and CHFA staff for their hard work and dedication during the round. Despite the impact of the pandemic, the team collaborated closely to meet the schedule. Lastly, due to the ongoing impact of the pandemic, CHFA will defer a portion of the reservation fee to be paid by the awardee at acceptance of the reservation. This equates to approximately $294,000 or 25% of the reservation fee. So in summary, staff recommends adopting resolution for the following developments. Allocation of approximately 1.3, well, let me just back up. Allocation of $1,316,250 in 2021 or 2022 9% credits for Westbrook Village Phase 4 in Hartford. Allocation of $1.8 million in 2021 or 2022 9% credits for Parkside Village 1 in Brantford. Forward allocation of $1,999,800 in 2022 9% credit for Crescent Crossings Phase 1C in Bridgeport. This award is subject to the applicant meeting the conditions of the tax credit reservation by October 1, 2021. Allocation of $1,018,146 in 2021 or 2022 9% LIHTC for McConaughey Terrace in New Haven. Allocation of $1,080,016 in 2021 or 2022 9% for Lascana Homes of Orange in the town of Orange. Allocation of $1,982,271 in 2021 or 2022 9% for Cedar Point in Newington. Allocation of $1,527,603 in 2021 or 2022 9% LIHTC for Hill Central Phase 1 in New Haven, allocation of $1,319,929 in 2021 or 2022, 9% credits for MLK Tyler Street and family housing in New Haven, allocation of $1,582,761 in 2021 or 2022, 9% for 340 plus Dixwell in New Haven. And last but not least, allocation of $1,049,441 in 2021 or 2022, 9% LIHTC for Linden Street Apartments in Waterbury. So with me is Deb Alter, the coordinator of the 9% round. She's also available to answer any questions as you consider the recommendation.
Thank you, Masuda, and thank you for all the work that the staff at DOH and CHFA did, very diligent. Talking to developers, I couldn't be happier that all the work paid off, and also making sure that we can continue the production of affordable units and preserve units that need to be preserved. May I have a motion to approve the resolution?
Moved. It's Tim.
Second.
Thank you, Greg. Discussion, any questions?
Hi, Kathy McKinnon. Masuda, I think you said that the lowest scoring project had 59 points. In the materials that we got, I think the lowest scoring project had 64 points. So I just wanted some clarification on that.
Correct. Yeah, the lowest scoring point that received an award is 67 points. I was just kind of talking in general as far as the applications that were moved up for consideration.
Okay,
yeah.
Got it. Thank you.
Any other questions? Okay, Shelley, could you call the roll, please?
Jerry Abrahams.
Aye.
Heidi DeWingert.
Aye.
Kyla Goslin. Aye. Tim Hodges.
Aye.
Steve Kitowitz.
Aye.
Kathy McKinnon.
Aye.
Salem Mascara Bruno.
Yes.
Franklin Perry.
Aye.
Sarah Sanders.
Aye.
Lisa Tepper Bates.
Yes.
Gwendolyn Thames.
Aye.
Greg Ugalde.
Aye.
Unanimous.
Motion carries. Thank you. Thank you, Masuda, for all your work, and the staff. Please let them know that we thank them.
Thank you so much, Commissioner, and congratulations to all the awardees, and we look forward to working with them.
Thank you. Hazin, you're back, and we're gonna have a conversation about homeownership.
Yes, thank you. Good morning again. So this morning conversation with the board, we just want to provide you with an update on the state of the homeownership program. Before I begin, I do want to thank Jean Slater and the CHG team who helped us produce the presentation. Next page, please. So before I start, I do want to set the stage about the homeownership program and what we do at CHFA. 99% of what we do in homeownership is to provide loans to first-time home buyers. The remaining 1% is to provide assistance under EMAP, the mobile home, the Habitat for Humanity, and RAMP. So essentially speaking, the first-time homebuyer program is the one that drives the homeownership / single-family program. When it comes to providing the funding for the first-time homebuyer program, we issue tax-exempt bonds. And for us to issue tax-exempt bonds, we need to utilize private activity bond volume cap. The moment when we issue tax-exempt bonds, the IRS requires us to set certain limits And those limits pertains to how much a person or a household can make and how much the price the home, the household can buy. By issuing tax exempt 2, we are also able to offer below market interest rate. As of today, we are offering first-time home buyers, if they elect to get a loan that is backed by a government insurance such as FHA, they can get a rate of 2 5/8 for 30 years. Or if they elect to go with a conventional loan, they can get 2 7/8 for 30 years. Generally, prior to COVID, we typically would purchase around 3,000 loans. That's our bogey. And that translates something north of 500 million a year. So I want to set that stage, so just to make sure that folks have some numbers. So what we found, at least what transpired in 2020, the first thing we saw was we saw a huge reduction in purchases along with reservation. We came about this data through the analysis of the data that we received from the Warren Group. And one thing about the Warren Group, just for the benefit of the group, the Warren Group data provide us the ability to decipher all the loan purchases or all the home purchases that occurred in the state at any given time. So what we did was we took the data and then we tried to identify how many homes were sold using loans, but then qualify under our purchase price limits. So according to the Warren Group data, in 2019, there were about 57,000, close to 58,000 of purchases occurred using loans. In 2020, it rose to close to 60,000. And of those numbers, we saw that about 30,000 in 2019 qualified under CHFA's purchase price limit. But then in 2020, that number went down to about 28,000. So that is, so we saw the drop of that 5% from there. Now for CHFA, according to the national realtors, they said that first-time home buyers market is about 33%. So when you take the 30,000 or the 28,000 for 2020, the amount of loans, again, this is based on a set of assumptions, the amounts of loans that were viewed to be purchased by first-time home buyer was around $10,000, $9,900. And for 2020, our production was only 1,600 of that close to 10,000. So we saw a drop in market share from close to 3,000 to 1,600. So that's how the 50% was derived. But then in terms of the overall market, we saw that inventory available for folks that qualify under our price limits only dropped by 5. Now, when we went through the whole exercise, of course, everyone has seen this, read this throughout, and it was reported that it's due to the amount of buyers coming from the neighboring states. There were a lot of competition to the point where it is in fact a seller's market, and if the seller has multiple offers, of course the seller will pursue, the buyer that provides and is willing to pay the most. So we saw an uptick in purchase price. Hence, we also saw a decrease in sales inventory for our first-time home buyers. So then we took a look at what can we do to mitigate those factors. And one of the things that we did pursue and the board approved last year was to revisit the down payment program that we have and expand the use of the down payment to ensure that it includes closing costs. And everybody recognized that when we talk about first-time home buyers, one of the things that cause them or creates the biggest obstacle is to have sufficient equity for them to buy the home. And when we made the change and when we rolled it out, we did see that reservations for down payment increased by about 23 percentage points. And the average has increased to about 13,000. The most recent purchases that we saw, it was 8,000. So that in itself, we can see first-time homebuyers are taking advantage. And for those who were not able, are now able to help them access their first home. In terms of the impact, we see monthly reservation has increased. Next page, please. So the other thing that when we were looking at and trying to decipher what transpired and why CHFA experienced this huge drop, we also look at the role of our lending partners and the low interest rate environment. We saw all the news about homeowners having the opportunity to refinance because interest rate dropped considerably of beginning of May when the federal government along the Fed had to take certain financial measures to ensure that the market did not tank. So we saw an influx of requests by homeowners to refinance their mortgage. And when we started seeing drops in reservation, lenders, our partners, were telling us that they were focusing a lot on the request to refinance. And one of the tidbits or the anecdotal statements that they made to us was because it's an easier way for them to make money because refinancing is much faster, quicker than originating a new loan. And then, of course, we also heard from them that CHFA has not been compensating them at market rate. So at the moment, what we're paying our lenders is 1.56 points. So for a $100,000 loan, that means the lender is able to make $1,560. The 0.56 was actually instituted back in 2014. And prior to that, lenders for CHFA was only making 1%. When we heard this from our lenders, of course, the knee-jerk reaction was, is this really true? So one of the things what we did, we reached out to our friends in different states and asked them, what do they typically pay their lenders? Because as you know, there are local lenders, but majority of the time, lenders, they do operate in multiple states. So what we found out was many HFAs are in fact paying more than what we are paying. So we are on the lower end of the spectrum when it comes to lender compensation. So we realize if we are in the lender's shoes, at the end of the day, it's still about trying to make sure what makes sense for your organization So we recognize that if we continue to pay them what we are paying them, they themselves need to pursue what makes sense for them. And if there is an execution that is better in terms of something that they can make more, then they would pursue that avenue instead of delivering the loans to CHFA. And then the last thing what we also found was, again, this ties back to point number one about the change in the marketplace where it has shifted to being a seller's market. There is this thing about competing and competition dealing with multiple offers. And first-time homebuyers right now are being squeezed out because due to the fact that they do need to get access to a down payment. So that's additional paperwork. And lenders, they do need to prioritize, which one makes more sense for them from a dollars and cents. So depending to the speed of their execution and how fast they can access the loan, a seller may not want to wait because if somebody can offer even the same amount, the seller would pursue something that they know will be much easier for them or have certainty. In fact, there was a report a few days ago that was issued through the MBA that talks about a buyer is able to increase its chances of success if it's a all cash. So that's number one. And the second one is if you can reduce financial contingencies. So if there's more stuff required and if the seller feels that this particular homebuyer, and not trying to discriminate against first-time homebuyer, if this person needs more time to get the loan, that person may not be able to compete with those that already have the necessary equity or the means to buy the house. So in addition to not being able to come up with or to compete from a dollar standpoint, speed also plays a big role. Next page, please. So here are the things that what we feel we can help borrowers today. So the first one is we do want to acknowledge that when it comes to our program, we do not underwrite, we do not originate the loans. We are working with our lender partners. And they are our conduit to offer the loan and also to even market our product. But then we also have to recognize they do need to run a business. So one of the things that we plan to do is to increase the lender compensation from 1.6% to 2%, or an increase of 0.44%. Knowing CHFA, we're not going to give them a free ride. What we want to do in return for this increase in compensation, we also would like them to deliver to us. And when we say deliver, we want them to deliver to us a clean loan. Loans that do not have hairs, that we have to get more affidavits or making changes to the documentation. And we would like that delivery to occur within 75 days. And we pick 75 days is because that is essentially like an industry standard. Of course, they can deliver to us much faster, but what we like to see is to deliver within that 75 days. Currently, our average is closer towards 90 days, like 80 plus. So we think that this is something that they can achieve, again, because of industry standard, and also because of this is one way for them to make additional margin. We think that in addition to getting the loans quicker, it will also reduce our exposure. How are we going to fund this? When the board approved the 2021 budget last November, we did include the 0.44 points into the servicing fee expense. But then, and again, it was something that we built it in, and then we were trying to see the development after we made the down payment changes. So we didn't want to rush something in. We want to progressively make the changes so that we can see how the program develop. The next thing that we are going to do is to reestablish the 0-point program. So again, it comes back to about trying to help improve the borrower's purchasing power or help them access the loan. So right now, for a borrower to access a CHFA loan based on the rate that I mentioned, which was 2 5/8 for a government insured and 2 7/8 for a conventional loan, that would require them to pay 1 point. Now, this 1 point, and I know some of you might be thinking, well, we just increased the down payment to include closing costs. That is true. But then at the same time, there will be household or borrowers out there that do not access the down payment. We also feel that the 0 point will make our program similar in terms of offering to the industry. So we don't want to make our program like stands out and so different. So it's just adding an offering by providing the 0 point, and by doing so, we would be fronting the 1 point, pay on behalf of the borrower to the lender, and then in return, they would need to pay additional 12.5 basis points. So in the current example, if the borrower is currently wanting to pay 1% upfront, then the borrower will get 2 5/8. If the borrower elects not to pursue and wants the 0 point, the rate will be 2.75%. We asked CSG to do some analysis, and based on our prepayment speed, this product is going to be very attractive to about half of our borrowers. Next page. Okay. Oh, you go back up. Yep. Okay. So now the other stuff that we're thinking about, and we sorted this based on what we can do today versus what we can do tomorrow. The first thing is we are looking at reducing the interest rate of our down payment assistance loan. At the moment, when it comes to down payment, the rate that we set is equal to the rate on the first mortgage. What we are looking into is to lower the rate of the down payment to go as low as 1% for a given period. And the idea here is, while the financial benefit might be small, but we think that this is a good opportunity to promote our program, especially as we are approaching the homeownership month, which is in May. The second thing that we are looking into is to formalize what we call a lender outreach officer. This is not to say that we haven't done any outreach, but we think, going back to all the statement that I made about the importance of our lenders and understanding what they are going through and what they're experiencing, and then getting that feedback to, bring that feedback back to management, and then formulate a strategy that works for CHFA, but also works for the lenders. So what we're planning to do is to have and identify and formulate to ensure that we have a person or persons that will be able to manage the relationship full time. So we think that that is important in the homeownership arena. The third thing is other types of down payments. Again, if we look at what we experienced in 2020, is one thing to offer a low interest rate, is another thing to compete with other borrowers that can bring in more dollars. So the way we think we can be helpful would be to provide additional assistance. But to provide additional assistance, we have to think outside of the box, because the current down payment program that CHFA is running is funded by the state. So one of the things that we are considering and looking into and investigating is to see whether or not there's a way for us to provide an assistance that would increase the borrower's purchasing power. But then if we go down that path, we also would like to safeguard it to ensure that assistance is provided to those who needed it the most. So when we talk to different states, what we heard was some are providing a 0% loan, non-amortizing for below 80% AMI, and some are providing an amortizing loan, but shorter term, but with a larger amount. So these are the things that we are thinking about and we are analyzing. But the idea is, again, how can we help our core constituents to access the home when the borrower is limited by the income limits, by the person income itself, by the back-end ratios. So how do we get the borrower to the finish line? The next item, next page, is to consider offering home purchase for non-first-time home buyers. And what we mean by this is those who do qualify under income or even under the purchase price, but they don't qualify because they are not considered eligible under the first-time requirement. We need to identify how we're going to finance this. But then, if you remember last year, the board did approve an arrangement where CHFA can access capital through non-bond means or non-bond financing vehicle. So the idea here is to help borrowers that experience a life-changing event, such as a divorce. So the person was on the deed and was qualified as a first-time home buyer. Something happened, and now that person is excluded from buying another loan based on technicality, or I should say, based on the requirement by the Interest Revenue Code. So the goal here is not trying to grab more market share, but is just trying to make sure that we're not leaving anyone behind and the person continues to need assistance to buy a house. Next page, please. And if we can do and offer a loan product for a non-first-time homebuyer program, we also think that there's an opportunity for us to offer a refinancing product. And again, the idea here is you may have a situation where a person does qualify or is within our income range, or we believe that they are people who are our core constituents, people who are in the low and moderate income band. And the only thing what they would like to do is have the opportunity to lower their housing cost burden. And if we are successful in doing so, it can help, we believe it can help other population that we have not helped previously. So I think, is there anything after that? I think that's basically it.
That's it, Hazim?
That's it. So I hope what I just want the board to hear that we are staying on top of this, that I wanted to frame that what we've been doing all these years has been to offer a loan product for first-time home buyers. But we realized 2020 was a year that no one has ever seen before. So we took a look at it, and we take it as a challenge for us to think outside of the box and to come out with ways where we think here's a way or here's a plan where CHFA can do and provide more assistance and more help. But if we want to do so, we just want the board, or at least trying to gauge the board, if it's okay to expand that,
This
because
feels like the
this is
safest
not
spot in
something that we have.
America.
This is not something that we have
I
done.
just
Thank you, Hazin, and thank you for being so thoughtful about how we can help and assist our first-time home buyers. And the home ownership is so important that we do need to do a little more. Questions for Hazin and comments?
I don't have any questions because I know that we're over time, but I want to say thanks to Hazim and staff. This, I think, is good work. I would like to study it a little bit because I probably have some questions that I'll come up with later on, but I think this is absolutely the right direction, and appreciate the work that you put into it.
Just real quick, Hazim. So when we look at this, and I know that you're looking at the stats and how it can help the first-time buyers, are we looking also at how our lender partners are going to look at some of these new initiatives that are being proposed, or do we have to wait till we talk about it?
No, I think it will be on a parallel track.
I'd like to just second Tim's comments. Thank you, Hazim, for the great work on this. In particular, really glad to see the effort you put into picking apart some of the issues that we've struggled a bit with in the past, like the reported relative delays in closing our mortgages. And we've talked about that, and it's been a little bit of a mystery. So, thank you for solving it here and for providing some concrete ways forward for us to address some of these challenges. I think there's some great ideas here that would allow us to be more effective in meeting our mission. So thank you, Hazim.
Yeah, I'd like to echo that as well. I know that this has been an issue in the finance and accounting, and this is really excellent work. Really excited to see if this stuff works, and hope that it does, and hope that you're able to report back quickly what components of the program have been most effective. And if it is, it's probably something that other HFAs around the country, which probably are grappling with the same thing, would be really interested in seeing.
And Hazim, last thing I'll say is just that it's really encouraging to see us move beyond that first home buyer space too, first time home buyer space, into looking at products and including maybe even refinancing. Those are great areas to explore for us.
Yeah, I would echo that. We are looking to be creative, and I would explore all of those potential changes that you outlined.
Great. Thank you so much.
Any other comments?
Hi, this is Kathy. I had a couple. So I'm a little like annoyed though that lender partners would not offer a client a better product because they're not going to make as much money. I mean, I understand CHFA should be competitive, but it feels like that sort of runs contrary to some of the CRA regulations. So
well, Kathy, I would say it this way. I don't think any of our lenders will say that in our face, because if they do, we would take the necessary action. I think what they're just trying to say is, if in a environment where they are overwhelmed, they would try to pursue the path that would get them to the finish line much faster and much easier. So they would prioritize, and we cannot tell them what to do, and we don't think that they are purposely putting or segregating our loans into a different bucket. But we believe, just from a business sense point of view, that a lender would pursue a program that makes them the most dollars.
I think the problem is the individual bankers, and I understand what you're saying, the individual bankers almost certainly work on commission. So it's not the banks would have to come up with incentive structures for the bankers so that the bankers themselves have different incentives. The bankers are probably just trying to close as many loans as they can to get the most commissions that they can.
The other question I had was, with the down payment assistance program, is there an upper income restriction on that right now? Or is it
It's tied to our first.
Okay.
So the down payment assistance loan is only available if you qualify for a CHFA mortgage. So by default, whatever the limitations set forth by the first mortgage.
Okay. I was in a training yesterday, and it was talking about sort of racial equity in housing, and the speaker brought up the fact that you know, households of people of color have been sort of excluded from building wealth, and that sometimes income isn't the issue, but the wealth piece is having that, that down payment, or parents where you can go to and get that down payment. So, I think whatever we can do to make that easier for people, I think will also further CHFA's goals.
Right. And the Warren Group data, when we analyze it, we did see a huge increase in down payment brought forth by borrowers, because we saw that in addition to an increase in sales price, we saw a decrease in loan amount. And this is just in general for the whole state. So that just means that, folks that were buying and that were squeezing out our first-time home buyers, they were able to put down more down payment. Hence, you will get a much quicker loan.
Right.
Because if you can put greater than 20%, for example, to buy a house, then the bank probably will, fast track your loan application versus somebody who can only put down 5%, for example, and then have to access CHFA down payment.
Right.
Hey, last question for me, Hazim. What are the next steps on this? I mean, what is the plan? You've just presented this, but what is going to happen after this?
So so based in terms of what we're doing now, we're doing now.
Yes. And then after
then
now.
the second page, the number one, which is the down payment rate, is an easy one. The lender relationship, that's, I wouldn't say easy, but that is something that we can handle fairly quickly. The third one is the additional down payment. We have the vehicle is just now is trying to construct, and once we finish construction, we have to present it to board, because that is in fact going to be a new arrangement, because it doesn't fall under our standard down payment. And the last two, when it comes to the non-first time, we need to bring something to the board to make sure that that's okay. Because again, this is something that we haven't done, and then we just want to finish up our research to make sure that we run through all the traps. And when I say run through all the traps, that includes our statute and all of the other stuff. But we just want to present this to at least get an initial feedback to make sure that we don't run afoul of the board in terms of what we think would be good and best for the resident of the state.
But Hazim, to emphasize the two things, when he emphasized the two immediate things that will happen right away.
Yeah.
You want to go back to those just for a
Yeah.
minute?
So the two things, meaning the lender comp and then 0 point. Yes.
Yeah, those would start right away.
Yeah, that one start right away. Yep.
And Hazin, to Tim's point, how long do you think it will take you to come back to the board with kind of a structure of those two other items that you're going to be working on? Not that I want to put you on the spot.
So I'm glad Valencia is coming back. So the beauty about number 4 and number 5, number 5, which is the refinancing, is more of an outgrowth of number 4. Number 4, which is to offer non-first time home buyer, we believe as long as we are not tinkering too much in terms of what we're trying to offer, because what we're going to do is, instead of requiring certain additional paperwork, such as the recapture tax or affidavits to say that you are a first-time homebuyer, those things, once it goes away and then we leave everything else the same, we think that we can fairly run and offer the program, because essentially we're just telling the lenders, you can offer this program. The only thing what we don't need you to do is to confirm whether or not they are first-time home buyers. Now, on the flip side, of course, before we do that, we want to make sure the board is okay. We want to make sure that in terms of our documents, such as our purchase agreements and everything that we have currently between us and the lenders, it satisfies and it speaks of this new product. If it fits, then I think by summer, if I have to throw out, and again, we will definitely do it quicker if we feel that there are less obstacles to jump over.
Okay, so that's a good goal to at least, I mean, if you sooner is better, but something to look forward to. All right, any other questions or comments? Okay, so Hazin, or if anybody has any comments that they can also send it to you.
Yes.
Steve, do you have a comment?
No, I have to leave. I have to switch to the Student Loan Authority board meeting, which is starting now.
So let's do, I have one more item. We have to approve the consent agenda. And I have a motion to approve.
I'll make a motion that we approve the consent agenda.
Second.
Questions, comments on the consent agenda? Shelley?
Jerry Abrahams?
Aye.
Heidi DeWinger? Heidi? Kylie Gosselin?
Sorry, I approve. I was on mute. Sorry.
Thank you. Kylie. Tim Hodges?
Aye.
Steve Kitowitz?
Aye.
Kathy McKinnon?
Aye.
De La Mascara Bruno,
Yes.
Franklin Perry. Franklin?
Oh, I think he left.
Okay. Sarah Sanders?
Aye.
Lisa Tepper Bates?
Aye.
Gwendolyn Thames? Glenn? Greg Ugalde?
Aye.
Unanimous?
Motion carries. Thank you, Shelley. And the last item on the agenda is adjournment. If anybody opposed to end the meeting? Otherwise, it's unanimous consent. Thank you, everyone. Have a great day. A great
Thank you.
rest of
Thank
the
you all.
Thank you. Bye.
Bye-bye.
No, I was